Hello and welcome to It's Your Business with Mario Toneguzzi on Megapix Media. Joining me today is Justin Thouin, who is founder of LowestRates.ca. Thanks for joining us today, Justin.
Thanks for having me.
Well, you folks put out a housing market report recently, and I wanted to talk to you about Calgary and what we can expect here in the housing market in Calgary this year. What are your thoughts on what Calgary is going through, has gone through in the past year, and will go through in this current year?
Yeah, in short, it's a tough time for housing in Calgary because even before the pandemic, with oil prices under pressure, that made it very difficult for housing prices in Calgary.
Yeah.
Then you had the pandemic with people losing their jobs, afraid of their finances, which certainly didn't help. And now with the Keystone XL project potentially not happening, it's almost a triple whammy for Calgary. And layer on top of all that, the Canadians now have more household debt than they ever have before. And we project that Calgary real estate prices may go down by as much as 10% in 2021.
That's obviously the worst in the country, correct?
Yes, Alberta's the worst in the country. There's other pockets like Toronto and Vancouver condos, which are really suffering right now, but we view those as having a more short-term bounce back than we see Calgary real estate and Edmonton real estate, just due to the overhang of what's happening with oil right now.
Yeah, and I guess a lot of the housing market is fueled, and pardon the pun being in Alberta, but fueled by the employment sector, right? And we all know how challenging that has been for Calgary and in Alberta in the last few years, and even this week, right? There's news that Cenovus, big energy company, has been laying off lots of people because of its merger with Husky Energy. So, when do you see that? I don't know, picture maybe improving for Calgary and the housing market?
Yeah, it's difficult to project because there's kind of weakness throughout the different forms of real estate in Calgary. I mean, if you look at the condo and apartment level, you have students that are working virtually or working from home as opposed to being in class. You have service people that don't have jobs, and those are the people that are typically filling the condos and apartments.
Yeah.
So that's weak. Then if you go kind of more upscale, to the semi-detached and detached housing, there's a lot of people who used to work at these oil companies that don't have either the same jobs or the same high-paying jobs. And so it's a really difficult question in terms of when are things going to bounce back. I think that immigration is going to be massively important for the province of Alberta moving forward, especially if oil doesn't bounce back. I mean, look, the world still needs oil. It's going to need oil. There's going to be a long time before oil is not needed. That's a reality. I think the fact that Alberta oil won't be needed has probably been overplayed, but it's just a matter of this Keystone project getting resolved and oil prices increasing, which I think will happen, but I think that's going to take a little bit longer than Albertans would like. So I think that immigration is going to be really, really important for Alberta, because with immigration comes more jobs that aren't necessarily reliant on oil. And so I think that's really going to be a key indicator of how quickly Calgary real estate comes back. The one saving grace right now is that interest rates are at record lows. It's very easy to get a mortgage right now, whether it's a fixed rate mortgage or a variable rate mortgage, for under 2%, and in many cases, well under 2%. And so that's enabling people that may otherwise have had to sell their homes to keep them because their interest payments have gone lower. And it's enabling people that may not have had the money to buy into a home before to buy into a home that they otherwise might not have been able to. And so that's a short-term kind of buoyant for the Alberta and Calgary real estate markets that's very fortunate right now, kind of with the overhang of the debt and the oil situation and the pandemic.
So, Justin, I would imagine that when we're looking at the Edmonton market, is fairly similar to Calgary?
Yeah, the Edmonton market is almost identical to Calgary. I mean, personally, I own an apartment building in Edmonton, and what we've seen, because it's kind of a lower end apartment building with about 60 to 70 doors, we've seen the students no longer being there, the service people no longer being there. They're moving back to either where they came from, because they came to Edmonton to either, work in the service industry or to go to school, or they move back with their parents. And you're kind of seeing it, as I mentioned, up the chain through to semi-detached and detached housing, very, very similarly to Calgary. So we're projecting Edmonton housing prices to go down by up to 10% year over year as well. I mean, at LowestRates.ca, we have millions of people coming to our website every year, and a large percentage of them from Alberta. So we kind of have a good feeling of where the market is, and unfortunately, it's not moving in the right direction right now with all of the macroeconomic factors.
So one last question for you, Justin. I'm just curious, the contrast to Calgary and Edmonton, like where is the housing market hot, I guess, in Canada these days?
Right. Well, the housing market, specifically for detached homes, is always hot in Toronto. It never seems to get cold just because there's so many jobs in Toronto. There's such a shortage of detached homes in Toronto. And it seems like the bulk of the immigration typically happens in Ontario. So the Toronto detached housing market is like a runaway train. It keeps going up and up and up and up. So that's probably where the biggest strength in the Canadian housing market is right now. But as I mentioned, even Toronto is having issues in the condo market because you don't have those students, you don't have those service workers filling up the condos. And so that's an issue right now because people who own those condos and rely on that rental income, they're concerned that they might have to default because they don't have that income coming in and they're still having to pay off their mortgage. So all across Canada, there are people struggling due to real estate, but no
Okay.
more so than in Alberta.
Yeah. Okay. Thanks very much for joining us today, Justin.
Yeah, thanks, Mary. I really appreciate it.
Okay, that was Justin Thouin, who is founder of LowestRates.ca. This has been It's Your Business with Mario Toneguzzi on Megapix Media. Thanks for joining us today.